Welcome back, guys, to another video. The Feds have raised the rates again. It's been a half-point increase this time, and they are expected to raise rates again before the end of the year, possibly multiple times. So in this video, I'm going to share with you why the Feds are raising rates and what this is doing boots on the ground in the field, in the real estate market, in the local markets, and also how this transitioning period can be a time of opportunity for you, the buyer who was priced out or overbid in this crazy hyper-competitive market that we've experienced in the last 2 years. So if you're looking to make a deal and looking for an opportunity, stay till the end because this video is for you. Let's get right to it. So today is April 6th, the day I'm shooting this. The Feds raised the rates, I believe, literally 2 days ago, and there was a 0.50, 50 basis points increase in the rates. Now, if you run rates today, which I ran a scenario before shooting this video, say you're getting a $1.3 million property, 20% down, you have a 730 credit score, you're looking at a rate of around 5.5% on a 30-year fixed. That's pretty painful compared to where they were literally 4 months ago. Now, the rates may be different with different lenders because the Federal Reserve has just made this change a few days ago. So lenders are still sort of adjusting their margins. So I'm giving you an average. In some cases, it may be a tad bit lower. With some lenders, it might be a little higher. So the average I'm giving you is 5.5%. Now let's get to the board and first answer the first question that I said I was going to go over is why the Federal Reserve is increasing rates. All right, so why are they increasing it? Their number one reason is to lower prices. Right now, inflation is close to 9%, and it's going to keep increasing if we don't do something about it. And we've already started to do something about it as a country. The Federal Reserve is increasing rates, which what it's doing is slowing down the flow of liquidity in the market because they've increased the bank borrowing rate by a little bit. So what that does is it's when the rates are higher, people are going to slow down, and they're hoping when buying and demand slows down, it adds more supply, and eventually, number two, we can reach some sort of an equilibrium where the supply and demand, where the supply is just, not there and the demand is sky high. So we're trying to reach a balance here by increasing mortgage rates, by increasing other lending borrowing rates for money. And that's the only way and the best and effective way the Federal Reserve thinks is by raising rates is the only effective way that they think they're going to be able to get this job done. So that's why they're raising the rates. And it's a scary time because here we were sitting at 3% or 2.5% in rates, and now we're 5.5%, almost touching 6%. It hurts. A lot of people are getting can't afford homes, but it will help us on the long run. And us agents and even buyers and sellers, we want an equilibrium in the market. It's just been unhealthy. We've been seeing 20, 40, 50% in some cases appreciation year over year, which in the last 30 to 40 years, we've seen 5 to 6% annually on average, which is more of a healthier number. We want to go towards that number so it could just be a better market and we can take control of these prices. So that's why the Federal Reserve is doing it. Number two, what I was going to cover is what's happening right now, boots on the ground in the market, in local markets. I'm in the Bay Area market here in California, so I'm going to talk about what's happening here locally in the market. And this resonates with most markets out there, but like I say always, there are pockets. Every market's a little different, but this should apply to most markets in this country. So number one, we're seeing prices coming down by a little bit. Not drastically. Before where you were seeing homes were selling way above asking price, now we're noticing that homes are selling close to what they're listed at, in some cases even at list price. And if the listing agent or the selling party hadn't really done their homework and had listed it above what the local comps were, then in those cases, those guys are starting to come down to where they should have listed it as, because we're really seeing a slowdown in buyer demand. So that's what's happening on the prices coming down. Now, I just talked about this earlier. Number two is affordability has become an issue right now, especially if you are buying a house that's $1 million or above. Just that half point or 1% change really changes your payment by a huge margin. And now in some cases, your DTI is just off the charts where you're not really actually qualifying, or maybe you do still qualify, but it's not the payment that you were comfortable with 5 months ago, and it hurts. And in some cases, in that higher tier, maybe renting is a better option, right? And guys, I'm in real estate here, and so I'm gonna give you genuine and truthful information. I'm not gonna BS you and tell you, oh, it's the best time for you. It all depends where you are in your buying cycle. It all depends where you are with jobs. It all depends what market you're in. So back to my point, if you're in an upper tier market and the rates have gone up, you have been really impacted by it because now your payments just skyrocketed. So affordability is what we're definitely seeing here in the Bay Area market, which is, your average home here in Fremont is 1.4, 1.5 million. So their affordability is an issue, and coupled with what you're really comfortable paying on your mortgage payment. So that's affordability. Number three, we have less offers overall, especially in the upper tier market. What I've been noticing here is a lot of townhomes that are in the high millions, like 1.2, 1.3 million. A lot of those properties have seen really low offers. First of all, the affordability, what I just mentioned to you. And secondly, a lot of those townhomes have HOA, and also in a lot of new communities have Melrose tax, which is tax here that allows the growth of the community. And you can Google this, but Melrose tax increases your mortgage payment. So when buyers are calculating all that, they're really noticing what it's doing to their payment. So they're holding back and not putting offers. So we are seeing less offers coming in, and in some cases, no offers at all, where the listing agent has to pick up the phone and call people that had either seen the property or downloaded disclosures. That's how some listing agents are actually getting and engaging interest, because it's an interesting time. So that's what you're seeing, boots on the ground. Now I'm going to talk about how you can take advantage of this opportunity, you the buyer. But before I go and talk about the opportunity, first I want you to ask yourself, is this a good time for you and your family to buy? Like I mentioned earlier, I'm not here to bullshit anyone. My goal here is to provide clarity and transparency and really tell you what's happening in the market so you can take advantage of it. But you need to ask yourself, is the rent that you're paying and what is your mortgage payment going to be? And you need to compare those two and see, maybe the mortgage payment is just in line with the rent, but like now you are actually owning a place. Maybe it's a tad bit higher, like $300-400 higher than your rent, but you can still afford it and you can own your own home instead of throwing this rent down the drain. Maybe you're priced out because you're in an upper tier market and you're looking in that area and your rents are cheaper. So you have to ask yourself that. But what I want to really highlight here is you have to look at real estate as a 10-year down the line, long haul business, not looking at it as a 2-year, 3-year thing, because in that case, you're always going to stress yourself out and it's not really going to be tangible or valuable for you to buy if you're thinking of doing a flip, buying it in it and then selling it in 3 years, because that's not the market we're in right now. Property values have really appreciated. But if you look at a 10-year trajectory and you know your job is strong and your credit score is good, and here's what your payment looks like, you're getting into a 30-year mortgage or even an adjustable rate mortgage, and it's going to be fixed for a certain number of years, and you can refi whenever you want to, you can sell whenever you want to, but your payment is not going to change as long as you're locked into a fixed program. So if you know your payment's not going to change and your payment is affordable and it makes sense for you and you're looking at it on a long haul, it is still a great time to buy, because I'm going to share with you where the opportunity lies right now. So let's get back to the board. So right now, what you're going to start to see, what's already happening is in some markets, there's almost double the inventory. Now, don't confuse that. Not double the inventory of where the inventory was in 18 or prior to COVID. Double the inventory of last year. So we're still haven't reached this equilibrium stage yet, but double the inventory where it was last year in some markets, in most markets. So what you're going to start to see is a lot more options where you wanted a certain square footage, you wanted this type of backyard, or you wanted this a 2-bedroom instead of a 3-bedroom. You're going to start to see more options, and you're already seeing them right now. So a lot more options for you to look for and bid on, which was non-existent. Number 2, you have price negotiations. There have already started to happen. I mentioned to you earlier on the upper tier market where there's less offers coming. Well, when that listing agent is actually calling your agent, buyer's agent, in most cases, there's going to be some sort of a price negotiation. If not a price negotiation, you're going to be able to negotiate or add some sort of contingencies which you were non-existent. You had to come in with a complete clean offer with no contingencies on it, where now you can possibly add a property inspection contingency or an appraisal contingency, and possibly have some negotiations happening to find you and your family a good deal. Now, the third point, which is the most important point here, is the market is adjusting to this new change. Everyone's adjusting. You're adjusting, the seller's adjusting, us agents are adjusting, the whole market is adjusting. So it's a very interesting transitionary period. I'm going to give you a little scenario from a seller side. So say, for example, seller has the home on the market. The listing agent gave a presentation in January saying, hey, we're going to rock this thing. It's going to sell. And we're going to get this much for your property. And then the rates went up, which we were expecting, but nobody really knew how high they were going to go until Fed started to raise rates. Okay, so now in this scenario, the seller is expecting a certain threshold, but they didn't list their property right away. They waited and they listed it now here in May. And they listed their property, did Saturday, Sunday happened, open house, couple people came in. Week passed by, no offers came in. So now that seller is scared, and so is the listing agent who had promised that this thing would sell like hotcake, and it didn't. So that's what I'm mentioning here when I say it's a transitioning period and people are adjusting to change. That's where the opportunity lies. So you and your agent can negotiate a price that works for you in this time while the market's still adjusting. Now, I understand the rates are very high, but these changes have happened in the past. Once the market has adjusted, we will slowly start to come back into an equilibrium stage, but the opportunity will be less at that time because now it's that interesting transitionary period that you're in. So if the numbers work for you, you have a great opportunity right now to take advantage of this market. I hope this video was insightful. I know I talked a lot about different points today. If you are interested and you're looking to buy right now and numbers work for you, check out this video that talks about the 7 tips that you should be crossing out right now and going over, because these tips are going to help you buy and take advantage of this interesting time in the market. If you're getting value out of this video, please hit that like button, because when you hit that like button, it makes me feel really happy and more people like yourselves see the video because more people are liking the video. Also, if you are getting real value out of this content, hit that subscribe button and subscribe to my channel to stay on top of your real estate game. And please comment below to let me know how you are really liking this video and how it's impacting your buying or selling journey. Thank you for watching.